The US and China are locked in a tense trade standoff. President Trump has escalated tensions with a new threat of tariffs. He vows to impose a 50% tariff on Chinese goods. This comes on top of the existing 34% Liberation Day tariffs. The new tariffs would take effect if China does not remove its retaliatory tariffs by Tuesday, April 9, 2025. This trade war began with Trump's America First policy. He argues that the U.S. has a trade deficit with China. He believes that tariffs are necessary to protect American jobs and businesses. China, however, sees these tariffs as unfair and harmful. The situation has created uncertainty in the global market. Businesses are unsure about the future of trade relations between the two superpowers. The tariffs impact a wide range of goods from electronics to agricultural products. The world is watching closely. Many fear that this trade war could have a significant impact on the global economy. China has responded forcefully to Trump's tariff threats. They have accused the U.S. of economic bullying. China argues that the tariffs violate international trade rules. They have vowed to take measures to protect their own interests. China has already imposed retaliatory tariffs on U.S. goods. These tariffs target key American exports like soybeans and automobiles. This tit-for-tat approach has fueled the trade war. It has made a negotiated solution more difficult. China is also looking for ways to reduce its reliance on the U.S. market. They are strengthening trade ties with other countries. This includes increasing imports from Europe and Southeast Asia. China's response demonstrates its determination to stand up to U.S. pressure. The country is willing to weather short-term economic pain. It aims to secure a more favorable long-term trading relationship. If implemented, Trump's new tariffs would have a significant impact on American businesses and consumers. The combined effect of existing and new tariffs could reach 104%. This means that U.S. companies could pay more than double the original price for Chinese imports. These increased costs are likely to be passed on to consumers. This would lead to higher prices for a wide range of goods. Everything from electronics and clothing to toys and furniture could become more expensive. American businesses that rely on Chinese imports will be hit particularly hard. They will face difficult choices. They could absorb the increased costs, cutting into their profits. They could pass on the cost to consumers, risking lower sales. They could also look for alternative suppliers, which could be more expensive or logistically challenging. The tariffs could also disrupt global supply chains. Many American companies rely on components or materials sourced from China. Disruptions to these supply chains could lead to production delays and higher costs. The escalating trade war has sent shockwaves through global markets. Stock markets around the world have experienced sharp declines. Investors are worried about the impact of the trade war on global economic growth. The U.S. stock market has been hit particularly hard. The Dow Jones Industrial Average and the S&P 500 have both fallen sharply since the initial tariff announcement. Tech giants like Apple and Tesla have seen their share prices tumble. European markets have also been affected. The FTSE 100 in London has dropped significantly. Asian markets, including the Nikkei in Japan and the Hang Seng in Hong Kong, have experienced high volatility. The uncertainty surrounding the trade war is fueling market anxiety. Investors are unsure about the future direction of trade policy. This has led to a flight to safety, with investors moving their money into less risky assets like government bonds. Section 5. No time for talks. Despite the market turmoil, President Trump has shown no willingness to back down from his tariff threats. He has rejected calls to pause the tariffs while negotiations continue. In fact, he has declared that all tariff talks with China are terminated. Trump's hardline stance has been criticized by some business leaders and economists. They argue that tariffs are harmful to the U.S. economy. They believe that negotiation is the best way to resolve trade disputes. However, Trump remains adamant that his approach is necessary to protect American interests. He believes that China has been taking advantage of the U.S. for too long. He is determined to use tariffs as leverage to force China to make concessions. The lack of dialogue between the two countries is concerning. It raises the risk of miscalculation and further escalation. Without communication, it is difficult to see a path towards a negotiated settlement. Section 6. Essential goods caught in the crossfire. The trade war between the U.S. and China impacts a wide range of goods. Key exports from both countries are caught in the crossfire. This has significant implications for businesses and consumers on both sides of the Pacific. China's top exports to the U.S. include electrical products, machinery, computers, furniture, toys, vehicles, and equipment. Tariffs on these goods would raise prices for American consumers and businesses. This could hurt demand and slow economic growth. The U.S.'s top exports to China include oilseeds, grains, aircraft, machinery, and pharmaceuticals. Retaliatory tariffs from China could harm American businesses in these sectors. Farmers, in particular, are vulnerable to Chinese tariffs on agricultural products. The tariffs are disrupting established trade flows. They are forcing businesses to adjust their supply chains. This creates uncertainty and adds costs for businesses and consumers alike. The longer the trade war continues, the more disruptive it will be to the global economy. Section 7. The world reacts. The escalating trade war between the U.S. and China has not gone unnoticed by the rest of the world. Other countries are closely watching the situation. They are assessing the potential impact on their own economies and trade relationships. Some countries see an opportunity to gain market share from both the U.S. and China. For example, Israel's Prime Minister has pledged to eliminate the trade imbalance with the U.S. and remove trade barriers. This suggests that Israel is hoping to attract U.S. businesses looking for alternative suppliers. Other countries are trying to mediate between the U.S. and China. Japan, for instance, is sending a delegation to Washington to discuss the tariffs. They are hoping to persuade the Trump administration to reconsider its approach. The European Union has offered a zero-for-zero tariff deal to the U.S. However, Trump has criticized the EU as being designed to harm the U.S. in trade. This suggests that the EU is also preparing for a potential trade war with the U.S. Section 8. The long road ahead. The trade war between the U.S. and China is a complex issue with no easy solutions. It is deeply intertwined with broader geopolitical and economic tensions between the two superpowers. The long-term effects of this trade war are difficult to predict, but they are likely to be significant. One potential consequence is a slowdown in global economic growth. The tariffs are already disrupting trade flows and creating uncertainty. This could lead to lower investment and reduced consumer spending. Another concern is that the trade war could escalate into a broader conflict. The U.S. and China are already engaged in a strategic rivalry for global influence. The trade war could exacerbate this rivalry, leading to increased military tensions and a new Cold War. However, there is also a possibility that the two sides could eventually reach a negotiated settlement. Both countries have an interest in avoiding a full-blown trade war. A compromise could involve China making some concessions on trade practices, while the U.S. agrees to roll back some of its tariffs. Section 9. A fork in the road. The U.S.-China trade war stands at a critical juncture. The decisions made by both sides in the coming weeks and months will have far-reaching consequences for the global economy. One path forward is further escalation. If neither side is willing to back down, the trade war could intensify. This could lead to a global recession and a fracturing of the global trading system. Another path is negotiation and compromise. If both sides can come to the table with a willingness to find common ground, a deal is still possible. This would require both sides to make concessions, but it would be in the best interests of both countries and the world. The world is watching closely, hoping for a peaceful resolution to this trade dispute. The stakes are high. The outcome will shape the global economic and geopolitical landscape for years to come.